All right. Well, thank you, Alice. And everybody, thank you for joining and spending about 45 minutes of time with us. My name is Keith Campagna. I am the Chief Sales Officer here at the ROI Shop. And the reason why I'm grateful everyone is here is because there are important conversations being had these days. And I've got David Hain, who's the co-founder of Gotham Growth Group. Thank you for that one, David. And Alice Heiman, who is a CEO, strategist, consultant, and chief sales energizer, right?
That's
Alice?
right.
And I came to these two people not because I know them a long time, but because I know they know the answers to a question that I had, and that is, how are CEOs managing their board of directors as it relates to all the opportunity out there in the market? So we're going to spend time talking about that and getting experience from two people that know all too well the challenges at a very high senior executive level. So David, Alice, thank you so much for your time. And then maybe David, we'll start with you, and then we'll do oh no, wait, how rude of me. Ladies first, right?
Yes,
Alice, please. A quick introduction, and then since you get the intro, I'll ask David the first question.
Okay. So hi, I'm Alice Heiman. If you don't know me, follow me on LinkedIn and you'll get to know quickly that I talk a lot about what CEOs need to know about sales, how CEOs can support their sales teams and help grow sales and scale sales, and how CEOs can interact with all the stakeholders of their companies to make sure that their companies grow at the pace that everybody wants them to, which is always very exciting. So I do work with CEOs all over the world, companies from about 10 million to 100 million who are scaling. So most of the companies I work with are tech, SaaS, or some sort of innovative company, and they want to grow. They're not startups. They're usually about 10 years in, and they're taking on private equity and growing their teams, growing their organizations. So I'm very interested in the way things are changing in our marketplace and how we are focused on our customers and how we can engage them and delight them so that they buy more. So that's a little bit about me. Here I am in Reno, Nevada at 5,300 feet. Yes, it was snowing this morning. All that rain that's coming from the West Coast is coming in and it's turning out to be snow for us, which is awesome. I live in the Sierra Nevada mountains right near Lake Tahoe in Reno, Nevada.
Nice. Thank you, Alice. Thank you and welcome. Mr. Hain.
Okay. Good afternoon. I think it's afternoon for just about everybody on here. My name is David Hain. I started Gotham Growth 19 years ago, and we are specific to the human capital industry. And if you don't know that industry, think of any software service that touches employees. And you generally have that market. It's huge, fragmented, segmented. And we work with boards and CEOs on growth. That growth could be, we want to grow in a different geography. We want to add a vertical. We want to acquire. We want to get funding, or we want to sell the company. If it's that time, we've hit the number. So I participate on several boards. I was previously CEO of a few companies in the space, and we're excited about this today. And Keith, fire away. Let's get to the content.
So let's start. We'll go with the easy ones for now. And really the idea here is to get the two of you bouncing ideas and sharing war stories here. But David, my curiosity to you is, with all of the opportunity that's going on inside of the markets, what are you seeing out there when it comes to CEOs effectively working with board members so that they can achieve growth, not just talk about it?
Right. Well, one of the first things in this market, this is very unique to this market, is managing the expectations of everybody on the board. They're looking at firms with 30 or 40 million in revenue, raising $400 million at a $5 billion valuation, just last week, in fact. So managing those expectations, because the market is rewarding growth at all costs, which is ridiculous, but it's the way it is, right? You can fight it. So managing those expectations, you're going to have board members saying, hey, why aren't we, a unicorn? Why aren't we raising $300 million? Well, in order to do that, you're going to have to grow. I mean, the metrics that are being quote unquote rewarded are very, very strong growth, strong net revenue, big margins, all the things that you would expect. And really, getting the board ready to have the conversation, manage their expectation, but at the same time, I need funding to grow. And I need to, when you're thinking about a board, one of the things that they're trying to do when they look at the CEO and the team is, they assume that your forecast is probably full of holes. So I'm going to jump on it. But really what they're trying to do is manage risk, right? And if you can approach them in such a manner, I'm not sure how you could say I could grow 500% without risk. There's going to be risk. But if you can approach them with that in mind, there's generally going to be an advocate on the board. Someone, if you've got funding, if you've got multiple funds, you really ought to know which fund you are, what vintage, where are they in that, what are their priorities. But really your strategic priorities, if it's growth, then everything should be tilted that way. And you should be in sync with marketing. You should be in sync with MQLs and really what it takes to build that foundation so that the board can't shoot holes in your growth story, because ultimately you want to get funding. And it's not unlike asking your client to give you funding to buy your product or service. You better have everything tight, make the case solid. But this is all obvious stuff. But in a market like this, Keith, it's just weird. You have people with unreal expectations. You may be the most conservative guy in the whole board, with your projections, in which case they're going to pound you and say, why can't we grow 400%?
Right. And you mentioned the F word. So Alice and I were talking about it, right? Forecasting, right?
Yeah.
Alice, it's not as easy as it seems these days.
No.
There's monthly ups and downs, quarterly trends that may or may not be identified. What are your thoughts?
Yes, forecasting is something that we don't really teach, right? And there is an art to it, of course, but there is science to forecasting. And I think that it's very difficult to do because most people just simply don't know how to do it. But David touched on a lot of things I want to kind of run back to really quickly before I get a little deeper into forecast. You have to manage expectations. As a CEO, you have a board who has expectations. Their expectations are usually ridiculous. Sorry, but it's true, right? And at the same time that they have these ridiculous expectations, they are trying to manage risk. Now, it does depend whether you're dealing with venture versus private equity. The risk tolerances are different, correct? And the some of the expectations are quite different. But these things have gotten closer together. It's interesting back from the days of the .com, when the venture companies were just throwing money hand over fist at people without a lot of expectation, because they just really believed that they'd throw money at 10 and 2 would turn out. And there's still a little bit of that going on, right, David?
Yep.
Yeah. So it hasn't changed that much, but with private equity, it's a little bit more of a benevolent investment. And they have a little bit of different expectations, but in any case, the CEO and the people who support the CEO, right? They need to manage the expectations of the board. Now, why did I invest money with you? Because I want to make a whole bunch of money. So that being said, we have to take these wild expectations and turn them into something realistic. And that risk factor is in there. So if you want to give me $100 million or $500 million to do something with, there's the risk in there. But then the reality of what you can get back for that is what has to be managed. Because I have clients whose investors are asking them to do phenomenal growth with not enough investment. And the CEO has to learn how to talk to their board and explain why that amount of investment isn't going to get the scale in growth that they're looking for. So I think that the CEO has a tough job and needs their supporting cast, all the other C-level people and all the people who report up into them, to help them form the story for the board so that the board understands what's realistic And with that, what investment needs to be made to get to that reality that they want? So forecasting becomes key. Now, since it's something that very few companies do well, and there's a lot of smoke and mirrors, it's like export it out of the CRM, usually Salesforce, and then mangle it in this spreadsheet, and then add this and pull this over, and voila, we have, how many man or woman hours later, a forecast that isn't right.
Right.
So I'm on either end of that saying, as a board member, you missed your forecast. Why? You didn't hit this number. You exceeded your forecast by so much. I'm wondering what's wrong with your forecast that you didn't predict this. And typically a sales leader or a sales ops person or someone, a group of people have prepared this forecast. They bring it to the meeting, and the board picks it apart, and usually the questions can't be answered, and they have to say, well, we'll have to go get that information and bring it back to you. So if you want your board to believe in you and fund you at the level you want, the very first thing you have to do is figure out how to get that forecast right and be able to answer their questions at the board meeting when they ask them, not say, I'll have to get back to you on that.
Right.
What do you think, David?
You remind me about how like the number one rule in sales is to know the answer. They're going to, whether you're manager, their boss, VP, RVP, whoever, know the why, whether you won or you lose, right? David, we know that most CEOs don't come from a sales background. So from your position with the board of directors, how does it translate from what Alice just described? We'll call it not the best way to go about doing it, right? What are you seeing from the board of directors side?
I think the most effective CEOs have a relationship with every board member. You literally cannot wait to the board meeting to start interacting with these folks because it's too late.
Right.
You really, each of them are going to have their own perspective on things, and you need to have that relationship with them offline, if you will. One of the things that does, to Alice's point, is it starts to cut down on, hey, get me this information for the next board meeting. Get me this, get me this. And you'll end up spending a whole bloody week getting ready for a board meeting that could be monthly or quarterly. And you've really got to cut that out, which means you've got to build trust and credibility along the way. One of the best ways to really engage in the group setting that is the board meeting is to already have it done. Just like you would, if there was a strategic buying group somewhere, you'd want to know how each of those people function, what their role is, and how you work with them. So
exactly,
in order to really make it function the right way, I'll go back to that risk word. And Alice said, pulling things apart and questioning this and questioning that. If you can show trust and credibility, how you build this thing from a foundation, then as a board member myself, I'm going to trust a little bit more about what you're saying. And now I'm going to focus on maybe what I want to have my board focus on, which is get me to the next level. Your job is to help me go from here to here. I'm charting this path, pick it apart. I've done a pretty good job, but I haven't thought of everything. Now help me get from here to there. And if you can get the team to function maybe separately from their own individual mandates, then I think you have a good shot at being successful. But back to the whole thing, boy, if you can't back your story up, if you can't look at the numbers and not have made a whole lot of mistakes, kind of like the IRS, I find one, I'm going to find five.
Right.
You really need to do your homework and prep for it. I hope that answers your question.
Yeah, I want to mention, David, too, that developing the relationships with the investors is so important. You touched on that. The CEO and everyone in the C-suite, in my opinion, should have a relationship with each of the investors. Now, some of the investors are not going to want to be bothered and don't want to have, relationships. Got it. But for the ones who do, the CEO is not the only person who should be having the relationships. The rest of the C-suite should have their own relationships so that they can have candid talks about things. I mean, I think so much of this is holding things so close to the vest. And that is one of the reasons you can't get an accurate forecast or share your forecast correctly, is because everybody's, kind of holding their own information, but it shouldn't be like that. So help your C-suite develop and your supporting cast, whoever it is that has to show up at the board meetings. They shouldn't be afraid of this unknown group of people sitting there that they have to report out to. They should have relationships, have the opportunity to talk with them, ask them questions, get to know them, because now we're in a situation where we feel like we can be more authentic, honest, and really bring things to the table. Look, the last thing an investor wants is for you to make a forecast and then at the end of the quarter, it's so far off the mark. Either you exceeded it so much or you didn't hit it. That's the last thing they want. I mean, they're trying to figure out what the future is for the investment, for the sale, for whatever it is, whatever exit that they want. And you're not able to give them accurate information to help them understand where you're going, how much more needs to be invested, what needs to change. It's terrible. No investor wants to be in that situation.
True. David, any thoughts on that one?
No, I think she's right. I think we've hit that pretty well. I think, Keith, let's move on to other questions.
The part that I'm curious about now is how to take advantage of all the chaos and all the opportunity going on in what you call the unique market, right, David? So how can, from talking to a bunch of private equity firms myself, I love I've kind of grown into the phrase, add fuel to the fire, right? We've got a company, we've got a product, we've got a market fit. How does somebody is there a specific way that you could approach the board to get maybe more investment that they originally said? Like, does it come in a certain formula, or is it just a matter of allowing them to, or selling the idea that they need to buy into or get more funding so that the company could reinvest in different elements?
What I would say to that, Keith, and Alice, I'd love your perspective, is you better find some leverage. It can't just be adding salespeople and bodies and more bodies. That's just not going to produce the leverage. The firms that are getting outsized growth have done a good job with digital, have done a good job with all the tools at their disposal in order to get leverage to that. For every salesperson I add, I'm actually adding the quality of 2 salespeople, right? By you leveraging all the digital and my MQLs. And again, marketing has to be in sync so that marketing can bring you those MQLs at almost an unnatural level. Some of the best CMOs I know walk around with numbers in their head all day long. Can tell you exactly what, where, how, and when, and they're in sync with salespeople. So it really, if you can have a strategy that can leverage beyond what a typical sales model would do, then you could get more money from the board, but you've got to make that case. You've got to connect it right back to the forecast. You've got to connect it. By the way, one last thing, you really need external data. If there's analysts in your space, you better talk to them because they know what your competitors are doing. And you really want to know, and you really want to compare, because if you're losing, if you're growing 40%, which anybody would be happy with, but your competitor's growing 80, someone on the board is going to hit you over the head with that one. So you better have a good answer to that. And it's not just about how fast I can grow. How long can I sustain a burn to grow unnaturally, since that's what I'm rewarded for? But I also have to cash flow. When am I going to do my next funding? When am I going to have my next event? Alice, go ahead and add to that.
Yeah, I mean, again, it's complicated, right? And for the CEO who's saying, I've got to spend, but also they want me to be cash flow positive. They want EBITDA. They want all these things from me. So I think it's a hard position to be in, and you need to have a lot of smart people around you, and you need to let your board guide you or bring in people that can guide you if your senior team doesn't have all the answers, which they probably won't. But if I've given you money as a board member or as, total board, an investment firm or whatever, I want to know, what are you doing with the money I've already given you, right? What are the results you've gotten? And what I see today is there are so many CEOs out there that don't understand what a modern sale looks like, what our modern buyer is doing, and how our modern buyer wants to be engaged. And so they're throwing good money after bad into sales methods that do not work and they're not getting the result. And so, today I urge the CEOs and senior teams to research and understand. Again, look at these analyst firms who are telling you, here's what's happening today in the market. Here's what the buyer wants. I mean, there's great information coming from like Corporate Visions, Tim Reister, who's telling you what the buyers want, right? There's good information coming out of Forrester and Gartner about what buyers want and what sellers are doing and how they're misaligned and missing the boat. And we have to understand how we are all engaging with our customer differently today. And what does that look like from the customer's perspective? So as a board member, I want to know, how are you looking at the marketplace and changing and shifting your whole entire sales organization to meet the demands in the marketplace now and in the future, not what you've done years ago? And just for everybody out there listening, a simple example is, are you still relying on flat out cold calling and cold outreach to get the sales conversations you need? Because if you are, I am not going to give you any more money, because I know that you are not being as effective as you could be, because that is not the way buyers want to be approached. If you have people calling senior leaders of companies, cold calling them, look, I'm a senior leader of a company. I don't answer cold calls. I don't take cold calls. They can't even get through to me. There's someone blocking me. So, and that's been the case for years, but it's getting harder and harder. So I want to know, who is your buyer? How are they engaging with you? And how are you meeting that demand? So if you say to me, well, we need more content. Okay, great. Why? So why should I fund that? Well, that's the way our buyers are responding. And we have this evidence to prove that when we put out content, we get more inbound than when we don't put out content. I mean, I need some facts around it, and bring me that Forrester or Gartner or Corporate Vision research and tell me that based on that research, our team needs to change. And the thing that is missing so greatly right now is a look at this as if it's, again, customer focused, revenue operations, where sales, marketing, customer success, and the rest of your organization work in tandem to engage the customer and delight them from hello to I've purchased from you and would like to continue purchasing from you, all the way through their life cycle. And there's just so many gaps right now, because companies still have a siloed sales department, a siloed marketing department, and a siloed customer success. And then everybody else just looks at sales and, has this terrorizing relationship with them. So we've got to get the CEOs out there to bring it all together and show the board they understand what's happening in their marketplace and what their customers want. And then the investors will say, oh, okay, I see that you really understand this market. You have a go-to-market strategy that we can get behind and we can fund.
And I love all of that, Alice, and I'm keeping my eye on the time here, because we have a question that came in from Julie, and I kind of want to combine what you just said and put it out there. And that's to say, what I heard you say is that there's a lot going on before the board meeting, that the CEO needs to break the silos and create one revenue conversation, right? The question from Julie has something to do with how do board of directors respond to the idea that COVID happened? And now as an organization, we have to change gears. We have to do a whole lot more. We have to be more agile. David, what's it been like for you throughout this process? And even, I'm sure it's still today, where a CEO says, we did everything right, but now we got to do it differently. We need a little bit more, money, time, help, what?
Well, you would have made that change a while ago, right? You would have, come out of COVID, and the firms who stayed the course, which sounded painful at the time, have benefited tremendously from that. So from a COVID perspective, when we look at acquisitions, for example, you almost have to throw out Q2, Q3 of that year and look at what the trends were before and what the trends have been since. But from a different perspective and what COVID has caused on the remote side, your whole sales strategy needs to reflect those capabilities and how people buy now, and how, to Alice's point, cold calling. I can't even imagine anybody doing that, although my phone rings 10 times a day. I don't know who's on the other end. But I think the difference there is that it really forces you into more effective and efficient channels because the old ways of doing things have changed permanently. I think that Band-Aid's off. It's not coming back. So if you look back to what I was saying earlier about achieving leverage and unnatural numbers relative to not as much cost, right? My salespeople aren't traveling, et cetera, but it also requires different skills. So you need to make sure that you're getting a budget for training, and going to folks out there who do sales training for remote sales where you've never seen them. We sell entire companies no one's ever met physically. I mean, we go from the beginning to the end, no one's met, which is amazing. You would have never seen that happen before COVID in a million years. Now it does. So that everything's changed, and that marketing, content, how you reach those people and why, that needs to be reflected in your budget. And it may require more money, right, to do different things than you did before. And again, it comes down to preparing the board and making sure that you've informed the board along the way. Make sure that you've kept them kind of on the leading edge. And again, I say this is really important. You get analysts, you got competitors, you better know what they're doing. Not that you need to repeat it, but they're not all stupid. Some are really smart, and you want to quote unquote borrow some of the things that are working for them as well. Talk to people outside your industry. What are other CEOs? I used to belong to like 4 different CEO groups, not because I wanted to belong to groups. I just wanted to hear different perspectives from different industries and different ways so that I could feather that into how I thought.
Yeah.
Alice?
Yeah, 100%. So in terms of just overcoming the missed projections, again, yeah, we should be beyond that now, but most investors understand what happened during COVID, but they are looking at your competitors. So if your competitors did well and you didn't do well during COVID, they're looking, okay, why? What are the differences? Why did you miss your projections, but these other companies who are similar to you did not? So there has to be a good answer, right? However, many companies are still recovering. As we know, it's the extreme from did fabulous, better than could have ever imagined, to completely tanked, like in the hospitality industry. But we're still seeing the repercussions. So the thing that the boards want to know is, do you understand how the pandemic changed your marketplace, and are you prepared to handle that for the future? So I was talking to the CEO of a 100-year-old company here in Reno the other day who has always done very well, and they're very well known. It's a brand that people would know. And the logistics is killing them now. So the pandemic, okay, that's one thing, right? But now the repercussions are long lasting, because now supply chain for the things that they need. So if you are in a position where your investors are looking at you and you're saying, oh, well, we can't do anything because of the supply chain, that is not a good enough answer. You better reinvent yourself. You better figure out somewhere else to get what you need, those parts, whatever it is that you need, get that from, or you need to go into another line of business or figure out some other way to get the revenue, because supply chain is a problem. It's going to continue to be a problem. And it is not a reason for missing your projections, because you should know it and be planning for it, right? Otherwise, why would I continue investing? If you're telling me, oh, I'm gonna have to wait till these supply chain issues are done for our company to make money. No, let's figure out another way. So they're looking for CEOs and their leadership teams to come to them and say, there are huge supply chain issues. We cannot get this product out the door fast enough. Therefore, we have these 3 ideas we'd like to vet with you. And let's choose one that's going to make us some money while we still continue this other line of business. But that line of business is not going to help us propel our growth in the trajectory that we had hoped it would, or with the speed that we hoped.
Yeah. Yeah. And it's interesting, as we're already at the bottom of the hour here, so that was quick, right? It's interesting to me to see a thread here, and that is the idea that the basic conversations that a CEO needs to have with his leadership, that they then need to have with the people below them, so that the company is on one page. Boy, it seems to me if they could nail that one, that habit and that concept will build upon itself, and making it that much easier for the CEO to do the exact same thing in front of their board.
Good point.
Right.
Yeah, and look, the bottom line is return on investment, right? So whether I'm buying your product to use at my company to get me something I need or want or have to have, I need to get a return on that investment. As an investor, right? That's really what it's all about. Show me how I'm going to get on a return on this investment in a reasonable amount of time, doing reasonable things. Even though I may want this wild stuff, that's great. I probably know I'm not going to get that, but let's get as close as we can, right? So how do we get that ROI, right?
Right. And don't come with one idea, come with a few, because we're going to poke holes in as much of it as we can. Maybe one or two will mesh into the one that you go with. David, we don't seem to be getting any more questions left here. So David, I'll ask you any closing thoughts at all about CEOs?
No, I think, if I look back on the mistakes I made in the past and the advice I give some of the CEOs I work with, all of them have great relationships with their board members. And I mean, great relationships personally, not always in the board, there's disagreements, but they're always settled in the right manner. And sometimes the board meeting is not the place to get down and dirty on something that's a disagreement. That's off to the side. But I think, knowing your board members, knowing what their priorities are, and then meshing that with what your priorities are and making sure. And sometimes you got to suggest maybe that board member doesn't belong with us anymore, assuming they're not an investor. You really need to have that team with you, because if you're spending 1 week out of 3 or 4 prepping for a board meeting because they're going to pound me, they're going to do this, they're going to do that, that's wrong. No one wins. No. It's terrible. Nobody likes it. You need to solve that in order to move it forward, but manage expectations. These are crazy times. The valuations are through the roof. I can't even tell you some of the weird numbers we're seeing out there. So manage expectations, because they're expecting you to do the same, and no one's situation is the same. Alice?
Yeah, I just ditto. I mean, you have to take a look at the situation at hand and manage it in the best way humanly possible. And sometimes, it's the happiest day of our life and the worst day of our life when we get those investors, because CEOs don't always know what it's going to be like, and their team doesn't really know what it's going to be like to have investors. And so I would say to any of you out there thinking, should we take on investors? Which investors should we take on? There are a lot of questions that you can ask to find out whether it's a good fit or not, because there is nothing worse than showing up at the board meeting month after month and getting beaten up as the CEO and the senior team and leaving there feeling, horrible, and then scrambling, to get some things done and get back to that next board meeting with not much better news. So I think a little bit of prevention is a good thing. And if you are having those kinds of board meetings outside of the board meeting, stop. As the leader, get with the board members and talk about how can we have better board meetings? What do we need to do? How can we prepare better? Can you help us? Don't just continue that cycle month after month because it's not helping anybody, right? So I think that CEOs can really work with their boards to fund the exponential growth that everybody wants, but we just have to be really thoughtful about it. And we have to use good evidence-based research to prove, what's happening in the market, what our competitors are doing, and show that if we do these things, it's going to make a change. So let me show you that I did a great job with the money you already gave me. And then let me show you what the future is going to be with the money that you're going to give us now and in the future.
Yeah. Like you said, it's all about the ROI, right? All right, folks. Well, thank you very much for your time. On behalf of Alice Heiman and David Hain, I'm Keith Campagna here at the ROI Shop. Hope you enjoyed it, and best of luck out there. Cheers.
Thanks, Keith. Take care.
Thanks, David. Thanks, Keith.
Cheers.